Hey everybody, welcome to our January 2017 webcast. So those of you who don't know, we were doing our monthly broadcast forever over on Spreecast and they shut down. And then we moved our weekly broadcast over to Blab and they shut down. So now we're over on YouTube and I hope we don't jinx it. So this was going to be a live broadcast today, January 10th, 2017. And because of some technical issues, we are pre-recording it because we weren't sure we were going to be able to iron all those out. So you guys are watching this as a recording. Next month, February, we will be live. And I love doing it live because you guys get to ask questions and we all get to communicate. So please, please, please feel free to subscribe to our YouTube channel. Ask me questions on YouTube. You can email me via YouTube. You can head on over to financeforentrepreneurs.co. You can email me over there. And my email address is just my first name, Lili, at financeforentrepreneurs.co. So so I really look forward to being back and I'm really excited about 2017. So far it's been an amazing, amazing, amazing year. And let's just go ahead and dive into how to find investors for free. So the first thing I really want to stress today is that you do not need money to make money. That's a common misperception I see. People think, oh, you have to have money to make money. You have to be from money. You have to be from a connected family to meet these investors. You have to have gone to an Ivy League school to meet these investors, all these kinds of things. I personally am the youngest of 5 kids. I grew up in a poor working class family. I'm the only kid in my family who even graduated high school. After high school, I went to college. I majored in finance because I love numbers. I worked in investment management, investment banking. So I just really, really, really want to stress that you don't have to be from money to make money. I built a company called Atelier Advisors, and for the past 10 years, I've been helping startups and entrepreneurs with their funding strategy, their financial strategy, and so forth. So I left a career in middle market investment banking because I was just making rich people richer. And I followed my dream and I created Atelier Advisors. So I really could help the average Joe, the average Jane. And so I know how hard it is to start from scratch and to build something up, which is exactly what you're doing, or else you wouldn't be watching this webcast. So it's scary, but you can do it. And I would say the first step is that you're actually on this broadcast, which is a step in the right direction. So you're a motivated person. You're looking for information, which is awesome, as opposed to somebody who is just sticking their head in the sand. So let's go ahead and jump in. The first thing I want to stress is that your problem or your perceived problem is not your real problem. So let me explain that a little bit. Entrepreneurs are always coming to me because they think that they need to raise money to build a company. And in order to do that, they need to pay lots and lots of money to find these investors. I think there's this myth that investors are so hard to find. They're, locked behind all these gatekeepers. And that myth is just completely not true. There's also a myth that you need so much money to raise, to build a company. And I would say that myth is absolutely not true. It is now cheaper to build a company, but I'd say distribution costs are higher because there's more noise out there. So there's a solution to that problem. And that solution to that problem is to build something that people want. So if you create a product or a service that is solving a real problem, then that solution is gold, right? You run into problems, or you run into issues when you are building something that nobody wants, right? So if you just stick to that golden rule of building products and services that people want and people need, and people want to need these things because they're solving real problems. Once you start solving real problems, then all these other perceived problems, they just go away, okay? So your real problem is finding a real problem. Your real problem is making sure that you're building a company, a product or a service that is solving a real need in the world. Now, that's something that people want to pay for. And even if it's not something that your user or your customer pays for directly, hence a ad-based model like Facebook or Twitter, it's something that they're going to keep coming back to, and they're going to tolerate the ads. And the ads, of course, are which pay for that kind of company. So I think that's really important for you to focus on your traction, getting users, getting customers, on your metrics. What are your unit economics? What is your average revenue per customer user? What are your customer acquisition costs? And what are your results? When you set out to do an advertising campaign, are you spending, lots of time, lots of money? What are your sales cycles? Those kinds of things. Like, get into the deep numbers about how you're building that company. And don't be intimidated and think that, well, I'm just getting going. I don't have any revenue yet. I don't, have anything to show. You have some customers, some users, you have some traction. Any traction you have is good. So I really want you to focus on that being your problem. Your problem is not that you need capital to build a company. That's not true. Your problem is not that you have to pay $2,000 to go pitch to an angel group, because that's not true. That shouldn't be true in your world. You can find these investors for free. And I'm going to go ahead and just jump into how you can do that. So the best way to find investors is to be what they are looking for. So we touched a little bit on that already, that you want to be a company that has users and customers and traction, all these great things, right? But even if you can't be that company yet, you want to be the kind of person the investors are looking for. So what does that even mean? I've been advising startups for the past 10 years, and I can say that I've met hundreds and hundreds, if not thousands, of entrepreneurs building companies. And I've watched companies succeed and become huge and big. And I've watched companies fail. And I will say this, that the type of person that succeeds at building a company is somebody who is entrepreneurial, meaning that they're incredibly, incredibly resourceful, they're resilient, and they don't give up. Okay, and those are resilience and not giving up are two different things. Resilience to me means that they can bounce back. Somebody who doesn't give up is somebody who has more longevity. So you have to have the short-term resilience that you can keep bouncing back, and the long-term longevity of somebody who doesn't give up. So that's what I believe investors are looking for. And because I'm sure that investors are as smart or smarter than me and can figure out that pattern matching, that if you look at all the successful companies over the past, 5-10 years, you see common traits. These people who are very intellectually curious, they're persistent, they're very resilient from day to day, week to week. They can bounce back really quick, and they don't give up long term, because you can have days as an entrepreneur where things are going good for the first 3 months, everything's flying high, all of a sudden, something lets you the air out of your balloon, and then you want to be able to keep bouncing back. You want to be able to keep bouncing back from all those different things. So the best way to find investors is to be what they are looking for, whether that is on a company level, that you want your company to have users and customers and traction and so forth, or that's on an individual level, you want to be persistent. So sometimes you're going to meet investors and you're going to pitch them and they're going to tell you no. Right? You don't want to be deflated when that happens. You want to be somebody who just keeps getting back up and going out there. And here's a perfect example. This is the CEO of Snapchat. And I've told this story before. So if you're an old viewer, then you probably have heard this story maybe like 8,000 times. I love the story of Snapchat, because all this guy did was he created a product, which is his app, that solved a real problem, which was people were getting frustrated because they would send text or photos or whatever, and they were getting passed around, and they would love for those photos just to be gone, right? So they had a 30-second life, would have been awesome. So he created that solution to that big problem people had. And one day, an investor was asking his daughter, who I believe at the time was somewhere between 12 and 14, what is the app that all the kids love right now? And she said Snapchat. So this investor proceeded to go hunt down the CEO of Snapchat, find him, and just force him to take the money. And not really force him. I shouldn't say that extreme. This kid was just building this at school. He didn't have a budget for it. It was something at the time. His hosting costs were getting to be too much, more than he really wanted to spend out of his own budget. He was thinking of shutting this little thing down. Here comes this investor saying, come on, take my money, let's do this. And so the rest is history. And so I'm going to talk a little bit about hosting costs as we get going, but there's always a cost to running a company, and you have to be really mindful, which he was. He was saying, you know what, there's a lot of hosting costs associated with this. This is a really cool company, people love it, but I'm not really willing to spend my personal money on keeping this going. And luckily the investors found him. Investors found him because he was doing the right things. He was just out there finding real problems, creating solutions, and he wasn't spending all his time trying to, find investors to invest in his company. He was just putting his head down and doing great work. And so I want to go ahead and recap a little bit on the 3 points that I want to make. The first one is that investors need you. So an investor's job is to find good investments, right? We think about how we interact with our customers. When you interact with your customer, you generally have no fear because you believe in your mind, you're more than likely right, that you are solving a real problem for your customers. You're going to your first 100 customers, you're communicating with them, you're interacting with them, hopefully in person, but maybe just online via surveys, and you're extracting information from them and you're providing them with a solution to their problem, right? So why don't you focus on investors that same way? Think about an investor, whether that's on the one end of this continuum, where it's somebody who is investing their own money, or perhaps it's somebody who's investing at a VC fund, or maybe it's somebody who's investing in a family office, right? Somebody in a family office is investing money for a family. No relation to them. It's not any of this person's money. It's just strictly a job. So on the continuum of an individual angel investor, it's their money. Where the VC, it might be a little bit of their money, to a family office where it's definitely not their money. Regardless of where that investor sits on that continuum, he or she needs to look good. They need to make good bets. There are no investors out there that I know of who are like sitting around thinking, I'm just going to like throw my money into some company. I don't even care if it makes it good. Everybody has pride, and they want to make sure that either they're going to make money from that, or it's going to make them look good. They're going to be proud of their investment. So with that in mind, look at your investors that same way, that you are helping the investor. The investor needs you. The investor needs to find good investment opportunities. So as you're approaching investors, think of your investors that way, that just like your customers, you're solving their problem. So you're bringing them the solution. The solution is your company. So I want you to really stress on thinking about investors as your partners, as your customers, that you want to go out and reach these people because they need you, you need them. It's a win-win from everybody. And the second point I want to make is that tech makes it easy. It makes it so easy. I mean, you're sitting here listening to this probably in your pajamas or maybe in your sweats because technology makes life so easy. You were able to find out about me through technology. Maybe it was Facebook, maybe it was Twitter, maybe it was that you're on my email list. You know me from technology, right? We may not even know each other in real life. Same thing with investors. You can find these investors on their Facebook, their Twitter, they blog. You can have access to these people, right? Because technology makes it so easy. And the third thing I want to stress is this is all free. You don't have to pay thousands and thousands of dollars to pitch angel groups. You don't have to pay hundreds and hundreds of dollars to go attend some cocktail party because there's going to be angel investors there. Remember, it's an angel investor's job to find good investments. They're not trying to make it hard for you to find them if you are the right kind of company they want to invest in. And I want to stress that if you are doing everything right and you're building a product or service that solves a real problem, then you should have customers, you should have users, you should have traction, and therefore you are a good investment opportunity. So here are the tools that I like to use. I did a course called 3 Steps to Raising Capital Fast. And in that course, I talked about lots and lots of resources. I talked about GUST. I talked about NVCA, which is the National Venture Capital Association. I talked about the Angel Capital Association, which is ACA. All of those are great. I like to think of those as directories, and they're good to cross-reference, just to kind of see who's there. Did you miss anybody? But I like AngelList and Crunchbase in reverse order. So I would say AngelList is a good place to start. AngelList is free to use. Their focus is mostly on helping people connect for jobs. So I feel that AngelList is not as robust as Crunchbase because it's a self-regulated. So I'm going to go up and put my own AngelList profile and I'm going to manage it. AngelList is not as managed as Crunchbase. Crunchbase is essentially a database, right? So Crunchbase, even the free solution on Crunchbase, is a really, really good resource where you can go in and search for investors. And if you want to get more sophisticated and do more robust search, you can pay, I believe it's $49 per month to get a Crunchbase account, and probably you only need it for a month, right? So what I want you to do is your way of finding these investors and finding these investors for free is to first of all change how you think about it. So to stop being intimidated by investors. They want to find you just as much as you want to find them. Start putting together this list. So what you're going to do is you're going to create a list of, don't even put a number on it, but it's going to lead somewhere 100 to 200 investors, but don't tell yourself that you have to get some certain number. Just set your basic criteria, and that's going to be that they understand your sector. So whether you're in food and beverage, or you're in robotics, or you're in AI, you want to make sure that they understand your industry. You want to start putting together a list. You're going to have their name, their AngelList profile, their Crunchbase profile, their blog, their Facebook, their Twitter, and then information about them. And you want to put this in a Google Share Doc, because you're going to share this with your attorney, with your advisors, with your team, with everyone who wants to help you. And you're all going to collect names of angel investors or VC funds, and it's going to vary depending on your stage. But what I would do is I would collect both angel investors and VC funds if you're still at the seed stage, the angel stage. And the reason why is because you're going to eventually need these VC funds and family offices and whatever. So why not get to know them now? I think the best time to look for investors is when you don't need them. You don't want to be that person who starts talking to investors the day or the week before they need to get an investment. You want to start building those relationships. So you've created your list. You know where these people are. You're following them on Twitter. You're friending them or following them on Facebook and LinkedIn or wherever, and you're reading their blog posts and you're having thoughtful conversations with these people. I would say that having a thoughtful conversation about a blog post that an investor has written has far more weight than going to some fancy schmancy conference or something that they're speaking at, because it's going to be really hard for you to even get in front of them. If you're doing both of those things, that's good. But not communicating, not sharing ideas with this investor is really a good way to shoot yourself in the foot. So don't just focus on the fancy schmancy events. Focus on communicating with them on a regular basis. Don't just save it all up to go one conference a year that you see this person at. So make your list, check it twice. And you're going to end up with 100, 200 names, and eventually it'll naturally trim itself down, because you're going to find investors who are investing in a direct competitor, so they're going to be off the list. You're going to find somebody who you go on their Crunchbase and you say, they haven't made an investment in a year, I'm going to take them off the list. That kind of thing. So once you get your list down, you should check out 3 Steps to Raising Capital Fast. That's a course. It's a free course. If you go to our YouTube channel, and you're watching this because you're on YouTube, this video is on YouTube, go check out our YouTube page, and you can find the videos for 3 Steps to Raising Capital Fast, and it'll lead you to our course page, and you can enroll in for free. And that course will show you how to put together an AngelList profile. So it talks about AngelList and OneVest, but you can really use this for any platform that you're going to be raising off of. And I'll just kind of give you the 3 steps to raising capital fast. The first step is to really get your numbers right, get your metrics right. So figure out what investors want, how to speak finance to investors, what investors want to know about your company, get those numbers all together. The second piece is finding your anchor investor or your lead investor. You maybe have 3 or 4 or 5 that are potentials, and you want to narrow that down to 1 or 2. And that's going to be the person who kind of sets the terms in your term sheet. And you want to have a really strong lead investor, because a strong lead investor can really attract lots of other investors. A weak lead investor can make your life miserable. So really pick a good lead investor, because that's going to really accelerate how quickly you raise your round. And the third piece is just the whole process of managing it. In that course is a timeline that you can download, and you can move it around. It's a drag and drop, and it'll help you kind of put together with your team, okay, when are we going to start raising? And you're going to want to use reverse engineering. You need the money by January of 2018. You better start raising in September. If you're going to start raising in September, you better start meeting those investors now. Again, don't wait till when you need the money to start pitching people. And you don't just go ahead and pitch them your pitch deck. There's a whole process behind this. So I'll kind of break it down for you if you were going to do AngelList. You'd have your pitch deck, you'd have your financials, your forecast, your historicals, your metrics, everything all together, your pitch. And then you'd start approaching those investors that you want to lead the round. And then once you hook somebody, then you'd put all your stuff on AngelList with that lead investor. Because once you've done that, you have everything together. You have the lead investor saying that he or she is going to be leading the round, or they're in the round. That's going to attract a lot of people. It's going to give you a lot of credibility. It's going to give you a lot of social proof. You don't just want to put up your profile without having any investors in. So that really, in a nutshell, is what the 3 steps to raising capital fast is. And you can jump in that class for free. And there's just lots of examples of what is a good what is a good profile and what's a bad profile. And on that course, you can email me any questions you want. I'm always, always, always here to answer questions to anybody who has any question about the content of the course or anything that comes up with you. All of this stuff I've created, whether that's 3 Steps to Raising Capital Fast, our Lean Finance for Startups, which is the cell by cell, step by step course on how to build out a financial model, how to figure out your revenue model if you haven't figured that out yet, how to create an investor pitch deck, how to create an investor list, how to create a valuation, how to create a cap table. I mean, everything you need to know. It's really like A to Z. That Lean Finance for Startup course, and even the third course that we did, it's 30 days of mentoring. That 30 days of mentoring, it's a boot camp. All of those courses came out of somebody asking me a question. So I created 3 Steps to Raising Capital Fast because somebody wanted to know how to pitch on AngelList. I created Lean Finance for Startups because I had people always ask me how to build a financial model. They wanted to know the step-by-step. How do you find the numbers to put in a financial model? Like they would find free financial models, but they didn't understand how do I find the numbers to put in that financial model. In the 30 days of mentoring, we created that because people were just always saying, you know, I've done the Lean Finance for Startups, but I need more help. I need you to sit down and actually work on my financial model with me. And I would work on the financial model, the pitch deck, the investor contact list, and even outreach. If I know an investor who is looking for a company like yours, I will make an introduction, but I will not get involved in just making an introduction just to make an introduction. I do not get involved in doing engagements where I'm just purely looking for investors for people, because what we do at Atelier Advisors and Finance for Entrepreneurs is we are an outsource, and our deliverables are financial story. That could be your financial model, financial review of what you've already done, helping you to tell a better financial story, and then forecasting out a financial story that's really legit and believable, and helping you put together your pitch deck, helping you put together your investor list. And we do introductions when we know the company really well, if we've worked with them. And so the Finance for Entrepreneur division is more like a do-it-yourself. Like if you're not ready to work with Atelier Advisors is a $5,000 per month retainer. It's how we work. We're an advisory firm. So we are coming on as a long-term advisor. Our engagements are for 3 to 6 months. And we do have advisor shares, all these different kinds of things. So Finance for Entrepreneurs, in my opinion, is the best bet for somebody who's looking for free, somebody who's looking for very inexpensive educational content that's going to get you going. And I personally am a consumer of free educational content. Anytime I have a question about anything, I will go online, I will go to YouTube, I will go to Quora, I will find the information online. So I just want to stress, the whole title of this was how to find investors for free. You know, you can find so much information for free. So check out financeforentrepreneurs.co. There's links on our YouTube page, but there's always free content, and we're always creating more stuff. So let me know what you want to learn. I'm not here live today, but I'm totally reachable on my website, financeforentrepreneurs.co. There's a contact page there. Let me know whatever you're struggling with, whatever's going on with you, whatever you'd like to learn more, because that's how I create new content. I'm always creating new content based on what people ask me questions about. So, just to recap, this whole session today was about how to find investors for free. So hopefully you haven't paid $8,000 to go pitch to angel investors. Hopefully you just went to AngelList and found them yourself. And again, the 3 Steps to Raising Capital Fast, that whole process will show you how to put together your profile. And if you want additional help, the Lean Finance for Startups is a good next step. And then if you really just don't want to do it on your own and you want someone to help you, the 30 days of mentoring is the next best bet. And usually people who go to Atelier Advisors are companies that are already established. They have revenue. They've been around for a long time. They want to hire an outsourced CFO, but they're not ready to make the jump, and they'll hire our firm to kind of come in and just kind of serve that purpose as they raise capital, as they get going. And we're just always there. We have had clients there like since 2008. We're still working with them. We're still advising them. And so it's more of a long-term strategy. I personally believe in do-it-yourself. I'm a do-it-yourself kind of person. So definitely check out financeforentrepreneurs.co. It's an easy route to go. Lots of free stuff, and keep the questions coming, you guys, because I love your questions. Your questions help me know what I want to create next. So I'm going to sign off, and I look forward to hearing from you guys, seeing you guys over on the YouTube channel, seeing you guys in my inbox. I look forward to your questions, and I'll see you guys back here in February. Talk to you soon.